Hey, Curtis. Thanks for joining us. Tell us about yourself and your business.
Absolutely. Thanks for having me. I work for M&M Mortgage. We're a mortgage company out of Roseville, and that's pretty much what we do.
So M&M because you like candy or names?
Originally, it was started by two guys whose name were Mike. So it was Mike and Mike.
Okay, and your name is Curtis. So
My name is Curtis. Now, there's some different owners, but it's still M&M because the branding was still there.
Okay.
And it's also easy to say, like the candy, M&M.
Okay. And so do you own the company or are you an employee of the company?
I'm an employee of the company.
Okay.
The owner is actually my son-in-law.
Oh, great.
So that helps me out quite a bit.
So there's a lot of mortgage companies. I guess what kind of sets you apart from the others?
Number one, we're a broker. So we work with, 20 plus lenders rather than going into a bank or a retail broker, and they basically just have what they have. So we've got probably over 100 different programs, that kind of thing, which I think allows us to take the customer and sort of custom fit something for them. Everybody comes in thinking they're looking for a 30-year fixed mortgage with the lowest rate. And then oftentimes that's not really what's gonna solve their problem. So we try to give them a few options. And
can you give us some examples of some creative options recently that may have helped somebody where a 30-year fix may not have been right for them?
So I had a customer, basically was a couple living with her mother. And everybody had not so good credit, some challenged credit, right? They wanted to buy their mother's house. Sure, we could put them into a 30-year fixed mortgage that was designed for people with challenged credit. It's not going to be a great loan, but it could get them in. So what we decided to do instead, after a lot of conversation or with the mother and everything, is that we put the mother into a reverse mortgage, which then enabled them to pay off the debt, the couple's debt, and some debt the mother had. And then that allowed their credit score to go up. Then when their credit score went up to something that was more amenable to a 30-year fixed, then we took them and they purchased the house with a 30-year fixed mortgage at a rate they could have never have gotten otherwise.
Oh, wow, that's awesome. Have you always been in the mortgage business, or what did you do before that?
So I was in the mortgage business back in what they call the Wild West days, before the financial crisis. I wasn't a loan officer. I was a financial controller. That's where I spent most of my career, being a financial controller, a director of finance. Then I made a move out to California. I lived in California for a while and helped run a couple businesses out there.
Where'd you live?
First, we lived in the Bay Area in a town called Pleasanton, which is kind of in the East Bay. I guess you'd say maybe sort of a suburb of Oakland.
Yep, for a little while.
Okay.
So yeah, familiar.
Right. And then we moved to the Central Coast, kind of by San Luis Obispo, in a small town called Arroyo Grande, which is about 10 minutes from there on the beach. So,
what kind of companies did you start up there?
So in the Bay Area, I was the director of finance and operations of a restaurant company. It was called High Tech Burrito. It was
High Tech Burrito.
It became, we actually saw it before I worked there, and I thought, High Tech Burrito, I don't understand that. Do like little robots put the burritos together or what? But it was started in the 80s by a guy who just thought high tech sounded cool, that kind of a thing. And then it was acquired by the man who hired me. I was brought in while the transition was happening to help the transition happen and then to get the company back on its feet. So I was there for quite a while. My wife, who was in tech, she worked for a couple large companies in the Bay Area, and then somebody that she had worked well with had moved to the Central Coast to work for a tech company in San Luis Obispo, and asked if she wanted to move out there and work for him. She was a product manager, and we went out there, stayed at a hotel, visited him for a few days, and thought, absolutely. This is where we'd like to live. So we moved down there. And then I got a job and was still looking. And then finally I settled on a agricultural research company down there. So I was director of finance at an agricultural research company. Learned a lot about agriculture that I had never.
To work with Cargill at all?
Oh, yeah. We worked with all I like to say the big evil companies, basically doing research. I had thought that these companies do them all themselves, but they don't. They hire them out.
So what kind of things did you find out in your research? Like healthier cows produce healthier milk?
It was mostly crops. So it was mostly pesticides, herbicides, stuff like that.
What's your take on, the American food with all the processed chemicals and things like that compared to other countries?
It's very much a factory operation.
Okay.
I guess I'll just say that.
So it sounds like you would recommend more natural.
Absolutely.
Things like
right.
That. Okay.
So then we moved back from California, basically to be, our daughter lives here still. And so we moved back here to be close to them, and we live next door. So that's really close.
Grandkids then? Or?
No grandkids, right. And then her husband owned M&M, so I went to work at M&M, and now, of course, the industry is completely different.
How so?
Well, before the financial crisis, there was no licensing. I had a couple of people that wanted to do a loan, and somebody just said, well, why don't you do it? I'm like, well, I'm not a loan officer. Like, yeah, you don't need to be a loan officer. You just, have them fill out this application and work out how much you want to make off of it, and then, then just go. But now there's, for good reasons, there's a lot of licensing involved, a lot of regulation, and that type of thing. And I think it's helped the industry quite a bit.
So somebody shopping around looking for somebody to do their mortgage, what are some questions that they should probably ask?
Well, first of all, shopping for a mortgage is something that most people don't do correctly. I'll talk to somebody on the phone that's got a spreadsheet that they've been working on for the last couple of weeks of different companies and what rates they're going to offer and that kind of a thing. And they don't realize that today rates change so often. They can change multiple times a day. And we have 20 lenders, so they're all changing all the time. If you're going to shop for a mortgage, try to figure out what kind of a mortgage you want. Usually that's going to be a 30-year fixed mortgage. And then you have to shop the same rate. So ask people, say you're looking for a rate that's, 6%. So everyone you talk to, what do you charge for 6%? Versus what kind of a rate you're going to give me. That could be anything. Somebody says, well, what are the rates? Well, they're whatever you want them to be, depending on how much you want to pay for them or whether you want to get money back for them. Instead, if you compare the same rate with everybody, you're going to get a better feel for what's going to cost more.
That's great advice. Is 6% these days, is that good, average, below average?
Well, it's hard to say.
Probably this morning.
Right. In the last, if you take the last 40 years, I think the average rate is like 7.5%.
Okay.
So an economist would say anything below 7.5% is a good rate. Anything above is not a good rate. But most people remember the days of 2.5%, 3%, and they think that anything above that is not good. I try to gently persuade people that 2.5% is probably never going to happen again in our lifetime. So,
Are there some guidelines or some things to watch out for when somebody should refinance?
So really refinancing is for a couple of reasons. Either you're in a loan and you'd like a lower rate because you want to pay less interest, which makes sense, or you need some cash. Maybe you've built up some debt and you look at all your payments and lowering the amount of payments you're making or the volume of payments you're making makes sense. Those are really the only two reasons. And if you're looking for a lower rate, well, that's pretty simple. You just have to be careful of what you're going to pay for that rate up front. If you're going to be in that mortgage for, if you think you're going to be in that mortgage for 30 years, then the amount you pay now is less important than If you think, well, I'm going to try to refinance at a lower rate and then maybe in a couple of years try to get a lower rate, well, then you have to figure out what's the return on investment for the upfront costs. If the return on the investment for the upfront cost is 4 or 5 years and you plan on redoing this in 3 years, it's probably not a good deal. If you're trying to get some cash, then you need to take a look at all of your monthly payments together and how much is this going to shrink? You're probably not going to borrow more money and pay a lower payment, but are you going to pay a lower payment altogether? And is that going to help you?
So the mortgage industry, is that something you think you'll kind of stay in until the end of the career, or is it something that you're just kind of, okay?
Yeah. I like, so if you do a mortgage correctly, you're really helping somebody immediately in their day-to-day lives by putting less financial stress on them and less, burden. Getting somebody into a house, I enjoy that, especially if it's a first-time home buyer. My advice for that is don't wait. Don't wait. People wait for, well, I want to wait till rates come down to this, or I want to wait. Don't wait. I have people now coming back. They were going to buy a house a couple of years ago. They decided the rates were too high. They didn't do it. And now but they really want to get into a house. Now the houses are more expensive. The rates are not lower. They're still renting. They've spent $30,000 on rent.
Yep.
And they still don't have a house. So
your advice is to avoid renting if it makes financial sense, because you just want to throw money away in some cases.
The best thing to do is to get together with a loan officer. I would obviously recommend a broker, but anybody, and see what a loan would look like for you today. And if that's not feasible, what do you have to do to make it feasible, or what has to happen to make that loan feasible for you? Not ideal, but feasible. And then work to get yourself in that situation, or, when the economy gets right, you can pull the trigger. Because once you get into a house, that's the first goal. It's just getting into a house where you're building some equity. Later on, worry about what the rate is. You can always refinance down, recast your loan, that kind of a thing.
Well, that's great advice. Well, thanks for joining us. How do people get a hold of you?
M&M Mortgage in Roseville, you'll find us. We have a 5-star Google rating because we really do try to do what's best for the customer. And at M&M, they pretty much kind of pound that into your head, that do what's right for the customer and it'll come back to you. I've had to tell people, I don't think this is the best option for you. Like, this loan doesn't make sense. And it's hard because everybody wants to get paid. But later on, they may come back to you, or they've sent me people thinking, okay, this guy's honest. He could have made some money off of me, but he told me, this does not make sense.
All right, great. Well, thank you very much for joining us.
Well, thank you.
Hey, it's Will with the Podcast Crew team. Spotlight is a vidcast shot at the Podcast Crew Studios in Minneapolis. We would love for you to be our guest. Email us at the email address on your screen below to get a copy of the upcoming schedule. It's free, it's easy, and it's a great way to try out a podcast or a vidcast with our pro team. We do an in-person, in-studio version if you're in the Twin Cities area, and also an online version if you're somewhere else. We'd love to have you, hear your story, and help you start your podcast journey. Thanks. Get in touch today.